CNBC TV 18, celebrating 15 years of leadership.
Hello and welcome to Markets Today. I'm Lata Venkatesh. With me is Sonia Shinoy. It was a very choppy day of trade with negative cues coming from Asia. We started on a slightly lower note, and then at one point in time it seemed to go even higher than 0.5% or a three-quarter percentage point cut. It was a 200-point fall on the Sensex, and then the Sensex recovered it all, only to lose a little bit by end of trade. Very choppy.
Yes, Lata, very choppy, and you get a feeling that perhaps the worst is not over, because the kind of stocks that sold off today, you know, heavyweights like HUL, ITC, etc., ICICI Bank, all of those gave you an uncomfortable feeling. But let's address all the top headlines. At this hour, the markets arrested the morning sell-off. Key indices closed flat, while midcaps outperformed. Big cuts were seen in banks, FMCG and cement stocks today.
Auto sales for January showed weakness for two-wheeler sector. Bajaj Auto reported a 9% drop in sales, while TVS Motors posted just a 1.1% year-on-year growth. Maruti, meanwhile, recorded a 14% jump, led by a doubling of exports. Eicher Motors too posted a 25% rise in total sales, so clearly all is not lost.
And HCL Tech added another 5% to Friday's rally as brokerages appear bullish on the stock. CLSA raised its target price to 2,200, and Citi did the same, raising it to 2,175 on their sole buy call in the Indian IT services space.
Sun Pharma and Baxi traded at all-time highs. The U.S. Federal Trade Commission gave an unconditional nod, not unconditional, conditional nod to the $4 billion merger based on or dependent on divestment of an antibacterial drug. The merger now just needs the approval from the Punjab and Haryana courts.
And top corporates in the fray for the payment bank licenses. In fact, Reliance Industries, SBI, Future Group and AB Birla throw their hats into the ring.
Well, those were the headlines, and here are the experts that we have lined up on the show for you today. Market perspective from Ajay Argal, the fund manager at Bearing Asset Management Company. On our corporate radar, we will get you YC Deveshwar of ITC and Rajiv Bajaj of course, Bajaj Auto. We'll also get you global opinion from Shane Lee of CIMB.
All right, and on to the day's trading action. First up, it was a volatile session of trade on the Lal Street. The market witnessed an intraday recovery after a sell-off in the morning, but the indices could not hold on, slipping back into the red in the last hour. Anuj Singhal is here to give us more on that. Anuj.
Well, bipolar trade in today's trade. The nature was bipolar. The mid-caps were up through the day, and there was absolutely no volatility in that. But for the large caps, both the Sensex and Nifty, there was quite a bit of volatility intraday. At one point, the Sensex and Nifty came back into the green after initial nervousness, but then by close they were back in the red. So it was all over the place, but midcaps did well in trade. That really was the talking point. And in terms of individual sectors, IT was the gainer while FMCG was on the losing side. Let's talk about some of these stocks then. First, for the gainers, you had IT stocks right on top, as I said. HCL Tech, for second day running, 5.5% higher on that. Wipro was up 3% and TCS was up about 1%. Some other prominent Nifty winners today included stocks like Axis Bank, which has now rallied about 20% in last 1 month. Larsen & Toubro was up 2% and IDFC as well, up 2.5%. On the FMCG side, we had some big losers in trade today, led by Asian Paints. That stock, one of the most expensive stocks in the market right now, was down about 6%. Lever was down 3% and ITC2 was down about 2%. And some other prominent Nifty losers include Bharti Airtel, which had a bit of a vertical fall over the last couple of weeks. That was down 4%. ICICI was down 2.5%. Big volumes on that stock in today's trade. And Bank of Baroda is slipping below the 200-day moving average. This has been one of the worst performers for last week or so. Finally, to the mid-caps, where there was a big outperformance. A lot of stocks gaining ground. IFCI was up 8%, Future Retail up 12%, Delta Corp up about 10%, Suven Life, that was up some 17% or so in trade today. Spark was up 10% and GVK Power was up about 5%. Tomorrow, of course, is a big day. It's the RBI credit policy. There is an outside chance of a rate cut, and that could be a big trigger for the market. But don't be surprised if the market makes big volatile moves tomorrow as well.
Thanks a lot for that, Anuj. And I take you up entirely on the fact that there can always be that surprise cut, especially after what happened on Jan 15. You can never say never from the Reserve Bank. Well, there was a method in the madness to today's buying and selling, you will have to say. Clearly, performance was rewarded, and you could see that not just in HCL Tech, which is continuing to get rewarded for the second day running for outperforming some of its more senior rivals, but even Axis Bank. The more you see big banks like ICICI belaboring under bad loans, you have to give Axis Bank a little more credit for managing expectations and its loan book much better than rivals. So people are coming back and buying Axis Bank after seeing the results of other banks like Bank of Baroda and ICICI. As well, you saw, companies like Bharat Forge, Exide. Exide perhaps may have performed below the street, but clearly it was also a decent set of numbers compared to so many who have not even been able to post revenue earnings. As well, Bharat Forge posting good earnings, and likewise punishment also came in for those who did not perform. Notably, the big two-wheeler company, TVS Motors, after being rewarded right through 2015 when sales disappointed, they had to be punished, as was Asian Paints, as was Berger Paints. So clearly it was a day when punishment was meted out to those who didn't perform and rewards to those who did.
All right, on that note, let's get our viewers some market perspective now. Ajay Argal, the head of Indian equities at Bearings Asset Management, told CNBC TV 18 that he's extremely positive on Indian equities at the current levels. And Dhananjay Sinha of MK Global Financial Services adds that the broader indices are no different. In fact, the mid-caps may very well outperform the larger indices going ahead. Take a look.
Direction of improvement for India is definitely positive. So India might be in a different position compared to some of the other leading markets. When you talk about US, the US markets have already done phenomenally well last year. And as most of us know, most of the performance came from the re-rating of the markets rather than the improvement in the earnings growth. When you need to look at valuations at a low point of the down cycle, you need to build in what the growth is possible, what the potential is over the next 2, 3, 4 years, if not longer. And from that perspective, the markets are not that expensive. They are definitely not as cheap as they were at the beginning of last year.
My sense is that if you look at the broader market, what is really happening is that the broader market is actually outperforming the benchmark indices. Largely on the back of the fact that you have good quantum of money flowing into mutual funds because of better retail participation. It is likely that the broader market will continue to outperform the benchmark indices.
Well, that's some opinion. Now for all the action on the futures and options space, let's go across to Varinder Bansal.
Well, Lata, you have been mentioning about the volatility, which was one of the major talking point of the day. But if you look at the options data, you will clearly see that 8600, 8700, put trading is happening, and clearly the base for the market, which was earlier at 8800, has come down to that 8600, 8700, and the call writing, which was earlier at 9000, 9100, is now shifting below to 88, 8900. So the band remains between 8700 to 8900 with a downward bias here. You were talking about some of the quality stocks like Axis Bank, HCL Technologies. Axis Bank was up 5%, open interest up by nearly 11%. HCL Tech also did well, open interest jumping over 11%. And watch out for PFC, and PFC, the stock was up 4.5%. The company will be reporting results tomorrow. And in the mid-cap space, IFC was up 8%. We saw long build-up over there. UPL reported good set of numbers. The stock was up 8% with long build-up. And Exide, you mentioned that stock was also up 6% with open interest moving higher. But one space which was punished, TVS Motors clearly down nearly 7-8%. Open interest moving up by nearly 21% on this stock. And even on Asian Paints, which was down only 5%, open interest was up by nearly 20% on the short side. And watch out for Crompton Greaves. That stock could be important. The stock was down 3.5%, but we saw open interest building up ahead of the numbers tomorrow. So we saw open interest build up of nearly 13%. So that stock could be important to watch out for.
Thanks a lot for that, Varinder, for all the stocks that we should keep on our radar for tomorrow. But let's shift focus to Motown, where auto sales numbers for January were announced today. Mahindra & Mahindra is hit hard in the auto segment as well as in the tractor segment. Maruti managed, of course, to eke out decent numbers, you will have to say, but the two-wheeler players weren't so lucky. Sonia, why don't you take us through all the details?
Well, as you mentioned, Maruti, that was the big star performer today after a very good set of numbers. So total sales went up by close to 14% for the company, and domestic sales have grown by 10%. Remember, that's important because we are seeing a slowdown in the domestic market, but because of new launches like the Ciaz, the Celerio, the domestic sales have been doing quite well. Exports was a strong showing as well, almost a 90% bump up, and a major chunk of the exports come from the European markets and the South American markets, so those markets have been doing well. On the flip side, a lot of disappointments. M&M, we'll start with that. The total auto sales were down by 6%, tractor sales were down by 26%, so it was a double whammy for M&M this month around. Apart from that, the biggest takeaway this month was how two-wheeler sales have fallen. So look at Bajaj Auto, the total sales down quite a bit. In fact, the motorcycle sales were down about close to 12% odd. And if you look at the export growth as well, it's been measly at about a 4% odd or so. TVS too, after a long time we've seen such a big disappointment because most of these markets export to Africa, etc. And there's been a big slowdown. So TVS Motors exports were down about 13.5%. So all in all, you'd have to say that weakness in two-wheelers, but there's still bright sparks like Maruti.
Oh, absolutely. Well, on that note, let's actually listen in to some of the bigger guys who spoke to us. Rajiv Bajaj, Managing Director of Bajaj Auto.
Three-wheelers, i.e. commercial vehicles, have actually grown quite nicely, about 14%, from about 36,000 to 41,000. Now within that, if you look at markets as in domestic and exports, this time it's the domestic market that has performed really nicely, up about 35% from 12,500 to 17,000, whereas exports has been flat at about 24,000. If we come to motorcycles, you're quite right to point out that there continues to be a year-on-year negative over there.
All right, let's now shift to the third quarter earnings of banks. Most of them are over, and what is standing out is the increase in NPLs for most of these banks. Let's go across to Ekta Batra, who has a neat summary of how exactly or how big is the NPL problem. Ekta.
Well, PNB, SBI and HDFC Bank are not taken into consideration for this Q3 analysis. It comprises of around 17 banks as well as NBFCs. What the analysis throws up is that majority of financials have reported worsening in terms of their gross NPA ratios on a sequential basis, which is basically 10 out of 17 of the companies analyzed. ICICI Bank, Bank of Baroda show gross NPA worsening amongst the big banks or the Nifty listed stocks. Otherwise, PSU banks that showed a worsening on a sequential basis quite significantly was also OBC, where the gross NPAs were up 69 basis points sequentially. Union Bank, which was up 39 basis points sequentially as well. Vijaya Bank, however, showed marginal worsening, so that has to be noted. The gross NPA was up around 6 basis points on a sequential basis. Other banks that showed some amount of worsening in terms of their gross NPAs this quarter included the likes of Indian Bank that reported its numbers today, South Indian Bank as well as ING from the private space. Now, 6 out of 17 financials maintained their asset quality this quarter, and majority were the private financials that maintained it this time round. So this included HDFC, Kotak Mahindra Bank, IDFC as well as Axis Bank. Amongst the PSU banks, what was noted was an elevated gross NPA of Andhra Bank, which stood at 5.99%, but it was maintained for the quarter on a sequential basis. City Union Bank, gross NPA maintained at 2% for the quarter as well. Lastly, 2 out of 16 financial companies reported an improvement in terms of their gross NPAs on a sequential basis. This included IndusInd Bank as well as Karnataka Bank.
Well, thanks, Ekta, for that fabulous summary on how the banks performed this time around. But as Ekta pointed out, Indian Bank also reported a marginal worsening in its asset quality this quarter. Listen in to what the management had to say.
All accounts above 1 crore are being discussed with the zonal heads and the HOGM on, you can say, day-to-day basis by the EDs. And we are generating alerts and talking to the zonal managers wherever the amounts are overdue, so that the accounts do not turn into NPA. There is not even a single account because of which has gone NPA on account of non-follow. But economic conditions or economic situation is something where we have to bear the brunt, and as soon as the economy starts recovering, I think we will be having a better recovery plan.
All right, that's the word coming in from the banking space, but hopping across to the FMCG sector, cigarette volumes under pressure is translating into a loss of revenue for the government. That's the word coming in from YC Deveshwar, the chairman of ITC. In the backdrop of this revenue loss, YC Deveshwar expects that the government will rationalize taxation for the cigarette sector in the upcoming budget. Listen in.
We are all hopeful of a much more progressive budget than we've been accustomed to in the past. And I hope that it will be a moderate budget as far as taxation is concerned, because evidence very clearly is that more you tax cigarettes, more consumption goes on to cigarettes that are contraband, or goes on to other forms of tobacco consumption. So there's a loss of revenue and there is a loss to the Indian brands.
All right, that's the word coming in from ITC. But moving on to some global opinion now. Shane Lee of CIMB is extremely positive on India and says there is further room for an upside in the Indian markets. Listen in.
We think there's a little bit of upside, but the market had such a good run last year. It was up around about 30%, so we don't expect those type of gains to be repeated again. We think there's a bit more upside to come. The issue that sort of worries us a little bit about India is that there's some pretty positive expectations built in for growth. So consensus for this year is around 5.5%, for next year 6.5%, and then 7% in 2017. We think the only way you can achieve that is through a pickup in investment, and we think that may be a little bit more sluggish than what the market anticipates.
And on that point, let's take a break, but we will come back with some trading strategies for tomorrow. We'll also get you some important brokerage opinion in a minute.